Welcome back to my weekly review and plan ahead for the next week. First of all, I'm going to go over the trades I ended up taking after Wednesday. As I said in my last video, I was holding 172.5 calls, held them overnight. Nice little gap up here once price action failed to hold above the open, got out at 130 for a nice little about 30% profit. Price action came down, found support, heavy buyers down here at 168.5, which is a very important level going forward. I'll get to a little bit once I get to the daily time frame. Once there was an inside candle indecision play above the VWAP, I got back into 175.5 calls again at 127. I was watching the 5-minute time frame here, which I need to get away from. I don't know why I keep doing that, but something I'll work out with myself. Anyways, it was chopping around, did not look like it was going to continue higher, failed to hold above the high, triggered me out of half the position. I wasn't going to take the whole risk on a play that may eventually reverse, so I got out. Rode the rest of it up throughout the end of the day. Did not close on the end of the day, which looks like it may have been a mistake. Friday, there was a nice gap down. These calls I were in actually hit a low of day on the open at 70 cents a piece. Anytime there is a gap down and I'm long in a position, I will cancel my stop order and wait to see what price action is going to do. Reason being, if I had a stop in there, market makers would have given me the worst fill possible and I would have gotten out at 70 cents. And once price action goes through your stop, it immediately becomes a market order. So whatever the market maker wants to give you for it, that's what they're going to give you. That's why I cancel my stops. Anyways, I was patient. As it turns out, it worked out in my favor. Got back in and added into my position here at 109, just above this 15-minute break. Took my average down to 118. The level of importance I was looking at was this gap up here, previous breakdown level, and this zone I had identified in my previous video. I got out at 133 based on the 5-minute time frame. There was somewhat of a reversal candle. Sellers hit the tape up here. As you can see, there's a little bit of volume here on this candle. Once it started to fail to hold the highs, that was my cue to get out. So ended up saving that trade, made a little bit of a profit on it. I also, from my previous video, said I was going to look for resistance here and take some puts. After I closed this out, kind of walked away for a little bit, came back and missed this trade basically. Came down, found support at this 168.5 level, which is very important going forward. I'll get to in a little bit as to why. Did not take a trade there, and into Friday, it did work its way back up, although there was a lot of chop. I do still think Apple is bullish and may continue higher. We're going to go ahead and go over to the daily time frame here in a second, and I'll explain why this 168.5 level is very important. Basically, it's now identified what looks like a trap trade. Bears have been caught on the wrong side of the trade. Now the market makers continue what they were doing and pushing the price up. There was potentially a double top up here versus this 176 and a quarter to 175. Confirmation of that double top was a break below this 168.35 level. As you can see on Wednesday, it flushed down through it, which likely trapped some bears in the trade. Anyone who was playing for that pattern shorted this break. Now market makers are trying to identify where their stops are. Go over here to the daily time frame, one candle at a time. You can see it broke below, nice bounce back above. I was saying in the trade crew chat room, is likely to have an inside day there on Thursday, which we did get. Nice hammer candle, trapped between the moving averages here. Price action does need to reclaim 170, 195, 172-ish area, which this zone does still represent. Basically it's going to be a chop zone. There's going to be a battle in here to see what happens. In my opinion, market makers are going to flush it up through here because this is where bearish stops are going to be, is in between this level, looking for a move lower. Now going over here, we have another inside day. Had this been an extended move up or an extended move down, this is basically a Shark 32 type of setup, which just means price action is being compressed and inside of the previous day's trading range. Now I want to go change this to my daily time frame here. This could potentially be a consolidation, just a slight pullback consolidation. You got volume here coming down at the bottom of the consolidation channel, which does imply that there's support. At the very least, there's interest in this level. So there's a battle going on. Whichever way it does break from here is probably going to create a new trend, whether it's up or down. Outside of this channel, you've still got the 50-day simple moving average as support here. However, on this break, I'll probably go ahead and take a cute little short here and see if I can catch a move all the way down to there. That's going to be about a $4 move. Anyways, over to my trade plan for Monday. I will be looking for a couple of plays here, a long over 172 versus stop loss just below whatever pattern does set up there. Also be looking for support entry down here around this 168.5 level, as that is a very important level now. If it breaks below it, bears are winning. If it holds above, bulls are obviously buying support. This here is the 21 EMA at 170.65. Because price action is right there, it's just going to chop around a lot. There's really no way for me, for my style, to gauge whether or not I'm going to trade as a support or a breakout. So I'm just going to wait for a move above the 8 EMA, which is right here. Up to here, this initially will be a temporary price target, just like the last time we had a trend. And I said I was going to look for a price target right around that level. However, if it consolidates and breaks above, I'll add into my position for a move higher. Overall price target for now is going to be this 176.25. However, if this is a flag, there is a measure move that might potentially play out all the way up here to around 188.5-ish, roughly 190 area. So we'll see ultimately what does happen. There's no way to gauge the time frame on this. It's just a pattern. Consolidation usually leads to another leg up. It may chop around just like the S&P did, making its way up to 262. We'll see what happens. This is my trade plan. Come chat with us over at Trade Crew. It is free. Have a good weekend and good luck.